Okay, here we are. We are on exercise 2, and it's called capital calculations. Again, we're looking at assets equal liabilities plus owner's equity. And now we're going to do scenarios. So we begin with, it tells us she has assets of $1,250,000. She has liabilities of $475,000, and it asks us, what is her owner's equity? Well, that's a replay of what we did before. So you're going to take assets minus the liabilities, and that will give us the owner's equity. So that's kind of how we play out through this entire problem, where you're going to do scenarios. So now they say for B, we started with $1,250,000 and $475,000, the same scenario up here, which means that owner's equity is $775,000. Let's just make that all zeros, or all with commas. So now what happens to this amount when we change the assets? We add $225,000 and we add liabilities of $110,000. Well, let's add those together and find out. I mean, it's calculation time, right? So if I take this, add that across. So now I have assets of $1,475,000 and I have liabilities of $580,000. What becomes my owner's equity? Again, you take the assets and subtract the liabilities and come up with owner's equity of $890,000. So the next one, now they're subtracting. So let's take this and subtract that $300,000. Now, this one, they're adding. See, we're adding that $90,000. So we'll add that to the equation. And again, you're going to come up with assets minus liabilities are going to equal owner's equity. That's fairly straightforward. I'll let you do this one. You should come up with, let me find the answer for that. You should come up with $1,460,000 by adding this, subtracting this, and then taking your assets minus liabilities. You come up with $1,460,000. So I'll let you do that calculation. Now this one was a little bit squirrely, because it gave you, this is the assets, these are the assets they ended with, these are the liabilities they ended with. What is my owner's equity? Well, that one's easy to figure out. Again, you take assets minus liabilities and come up with owner's equity of $1,225,000. Then it asks you, what's net income? And you're going, huh? Well, let's make that over there to the right so you can see that. What is net income? Well, if the only things that affect owner's equity are either investment, and it says there were no further investments, or withdrawals, and it says there were no withdrawals, that leaves the change between the beginning inventory, or beginning retained earnings, and the ending inventory. Let's try it again. Ending retained earnings. We began with this, we ended with this. The only thing that can now be affecting that is net income. So, if I find the difference between those two, I'm going to find net income. So that actually, right here, is a retained earnings statement, where you take the beginning, compare it to the end, and you'll find the net income, all things being equal. So that kind of shows you how you can use the accounting equation to calculate numbers that are, to calculate data that's not given to you. I'm going to end this one. This is going to be exercise 2, and then we're going to move on to accounts and statements.